Stop saving for 20% down. If that's your only goal, you're likely waiting for years longer than you actually need to.
It's the Mortgage 101 podcast where real talk meets home and life.
But on the flip side, stop thinking the down payment is the only check you have to write. The biggest heartbreak I see in this business is when a buyer finally saves up the down payment, finds the dream home, gets to the closing table, and then realizes they're still $10,000 short because nobody told them about the hidden fees. In this video, I'm going to break down the 3 stacks of cash that you actually need to buy a home in 2026. I'm going to go line by line through the closing costs nobody tells you about, and then I'm going to show you specific negotiation strategy to get a seller to pay 2 of those stacks for you. Welcome to Manley's Mortgage Minute, powered by the Mortgage 101 podcast. I'm Manley, and today we're building your cash to close blueprint. Let's start with stack number 1, the down payment. This is the one everyone knows about, but so many, especially first-time homebuyers, get the math wrong. The myth is that you need 20% down to buy a house. This is false. That rule's from 1980. In 2026, the reality is much more accessible. If you're a first-time homebuyer on a conventional loan, the minimum down payment is just 3%. If you have a credit score under 680, you might need an FHA loan, and that minimum is 3.5%. And if you're a veteran or looking in a rural area, a USDA loan, that is literally 0% down. And that doesn't even speak to potential grant programs that may be available to you and are completely driven by where you're looking to purchase. Let's use real numbers. Say you're buying a home at $400,000. The internet says you need $80,000 or 20%. The reality is you might only need $12,000 or 3%. That's a $68,000 difference. That's the difference between buying now and buying in 2030. That $12,000 is only the first stack. Now let's talk about the fees. Stack number 2, closing costs. These are the one-time fees to get the loan done. Now, if you don't want to just budget blindly, I want you to know exactly what you're paying for. A good rule of thumb is 2 to 3% of the purchase price. But let's break open the black box. What is actually in here? First, the lender fees. This is usually the underwriting fee or a processing fee. This pays for the humans who verify your income and structure the loan. Second, the third-party fees. These are the big ones. The appraisal. We hire a neutral third party to prove to the bank that the house is actually worth $400,000. That usually costs about $500 to $700. Then, the title company. This is crucial. You pay for the title insurance to make sure the seller actually owns the house and there are no hidden liens from a contractor 10 years ago. Then the government. Yeah, they always get their piece. Depending on your state, you have recording fees and transfer tax. This is just the cost of telling the county you're the new owner. When you add these all up on a $400,000 home, stack number 2 could range between $3,000 and $9,000. That's a big range. Now stack number 3. This is the one that surprises people the most. It's called the Prepaids and Escrow holdbacks. You aren't just buying a house, you're prepaying your future bills and setting up an escrow account. The lender doesn't trust you to pay your property taxes and insurance on your own every year, so we force you to save for them monthly. But to start that account, we need to put a little cushion in the upfront. Homeowners insurance, you have to pay that full first year's premium upfront. That could be $1,500. Then the property taxes. Depending on what month you close in, we might need to collect 3 to 6 or even 9 months of property taxes upfront to ensure the account has enough money in it when the tax bill arrives. So even if these aren't your fees, because it's your money going towards your bills, it's still cash that you have to write a check for today. On your $400,000 house, this could easily be another $4,000 to $5,000. I'm going to add a bonus stack here that Zillow definitely won't tell you about. Stack number 4, reserves. Reserves means how much money do you have left in the bank after you write that check. Now, we cannot let you spend your very last dollar at the closing table. What if your water heater breaks down the day you move in? You're going to need cash. For most loans, we want to see that you have 2 months worth of mortgage payments left over in your checking or your 401k. So if your mortgage payment is $3,000, you're going to need to show us that you have another $6,000 tucked away. You don't have to spend it, but you have to show it to us. All right, the strategy. How to pay 0 in closing costs. So if you're looking at these stacks and panicking because the number is too high, here's the strategy. You cannot borrow the down payment, stack number 1. That has to come from you or a gift. You do not have to pay for stack 2 or stack 3. We can use something called a seller concession. When we write the offer on that $400,000 house, we can ask the seller to give us a credit of $10,000 at closing. Effectively, we raise the price slightly, maybe even to $410,000, and ask for that credit back to you. You finance the costs into your loan over 30 years, and you keep that $10,000 cash in your pocket today. This is the single best way to buy a home if you're cash strapped and have good income. So let's recap. Stack number 1, the down payment, the skin in the game. Stack number 2, the closing costs, all those fees. Stack number 3, the prepaids and your escrow account that you set up. Stack number 4, reserves, your safety net. So now here's the reality check. One size never fits all in this business. While I just showed you your likely case, your specific credit score, your loan program, and even the county you buy in can change these numbers dramatically. Even if you think you have it all figured out, it's always better to talk to a mortgage professional than guessing with your life savings. So, if you want to verify your exact numbers, not just a Google estimate, I have a cash to close above and beyond your down payment spreadsheet that I can run for you in about 15 minutes. I'll show you exactly how much you need to save. Click on the link below and book a strategy call. And hey, if you like what I'm putting down here, make sure you check out more of our videos on this channel, especially the deep dive I do with Anthony on the Mortgage 101 podcast.